all of our activity in all markets. Tomorrow, we'll actually build the techniques and the strategies that go on top of these concepts. Okay, so first, the foundation. We're going to dedicate our time today to building out our foundation, building out the theses and the reasons for our actions in the market. Tomorrow, we go into far more detail in terms of putting specific tactics and techniques. We're going to build specific tactics and techniques on top of those concepts. Okay. And so before we get started, I do want to let you know that what I'll be going over, what I'll be teaching you are things that I've learned over the past 4 decades of playing the markets, 36 years of those 4 decades trading the markets professionally. These are things that I've realized along the way during my journey. I want you to understand that everything I will teach you today and tomorrow is universally applicable to all markets traders. So whether you trade predominantly the equity market, that's stocks, whether you trade the Forex market, various currency pairs, whether you've even started to dabble in trading cryptocurrencies or even options for that matter, everything that I teach you is universally true in all markets. And that's largely because what I teach you are things that are based on human psychology. So many traders, if they get good at this game we call trading, they understand that the vast majority of this game is based on trading psychology. It's based on those elements that move all human beings, which are predominantly fear, greed, and uncertainty. And so all of my trading tactics and techniques, all of my concepts are centered around what moves human beings, which in turn move markets. And so because of that, because everything that we talk about, everything I'll teach you is based on that human psychology, you can take these things in any market where human beings trade, and it will be valid with some small tweaks. And throughout the course, I'll let you know whenever, for instance, one little thing might be a little different in another market, I will let you know. But I want you to understand that everything you learn is applicable in every market, okay? I also want you to be aware of the fact that everything you'll learn over the next 2 days is applicable in every time frame. So not only is it universally applicable in all markets, no matter which market you trade, it doesn't even matter what time frame you decide to trade those markets in. Every concept, every technique is applicable in all of those time frames. Very important for you to understand. All right. So without any further ado, let's begin. Let's delve in. Grab something to write with, take notes, okay? Understand that you'll always be able to come back to every single section and flesh out those notes better, okay? This is your course forever, and it will continue to evolve. It will not stay static. So quarter by quarter, year by year, this course is going to evolve with new charting examples and things of that nature. So I want you to be encouraged to come back to the material and take more thorough notes. Okay? All right. So let's get started, guys. Let's do this. As a basic disclaimer, I'm sure many of you realize that nothing here that we cover over the next 2 days is financial advice. Everything is for educational purposes only. This course is designed to give you the ability to play the markets with a higher degree of intelligence and a higher degree of skill. All right. But understand that it's designed to make you an independent trader. All right. It is not designed for you to follow me or anyone else in their market play. Okay. All right, guys. The Oliver Velez method. Now, the first thing I want to let you know is that when I first started trading, I traded the ticker tape. I was what's called a ticker tape trader, which means that I used to watch every single price go by on an electronic board. And I would watch the frequency of those trades and the size of those trades literally going by in numbers. That was called a ticker tape trader. It was only after years of doing that that I gradually transitioned into a chart trader, a chart-based trader. And a chart-based trader is largely still a ticker trader, but in a more general way. But what I've found is that it is easier to read market behavior in the form of charts, and in particular, candlestick charts. And so this is why I've said candles light the way. And what I want to talk to you about specifically right now is the market's 4 major ticks through the eyes of candlestick charts. Now, of course, every bar or every candlestick is going to have 4 major points. The first point is the open of every single bar. That open represents the first tick or the first transaction or the first trade in a certain period of trading. And so if we're looking at a 2-minute bar, the first trade in that 2-minute period is going to be represented by the opening transaction. Of course, if from that opening price, right, future prices or subsequent prices start moving up to the upside, so you get prices that are higher and higher from the first price, of course, it starts to paint the color green. Now, I know this might be very, very basic, but some people need this initial understanding of how a candle grows from its opening price. This is the basis for understanding how markets operate. And the first thing I want you to understand is that every bar has an opening price, and the color that it paints from that opening price depends on where it goes after the opening price. So if the stock has an opening price and rises above the opening price, it begins to paint the color green. If from that opening price, all right, the stock drops below the opening price of that bar, it starts to paint the color red. Now, as basic as this is, it might be so basic that you might miss the importance of this. But I want you to understand that every bar is nothing more in a stock, in a market. Every bar is a tug of war between 2 sides, the buyers, green, and the sellers, red. They start off every bar with a brand new fight, if you will, a brand new tug of war. All right. If the bulls are winning the tug of war, they're pushing the market above the first price, above the opening price. If the bears or the sellers are starting to win the battle, they're pushing the price below the opening price. So remember, green is painted above the opening price. Red is painted below the opening price. Green suggests that buyers are more dominant during this period of time, and red would suggest that the bears are more dominant during this period of time. Now, keep in mind, these bars can be any time frame. It can be over a 1-minute period. It can be over a 5-minute period. It can be a daily period or a weekly period. The concept is the same. All right. Green is the color above the opening price. Red is the color below the opening price. All right. Let's talk about what I call an elephant bar. An elephant bar can be a bull elephant bar, a green one, or a red elephant bar, a bear one. Now, what exactly is an elephant bar? It is like the footprint of a big green elephant or the footprint of a fairly sizable red elephant. Think of every single bar as a footprint in the dirt or in the sand. Now, if we're searching for an elephant, we're not going to look for a small footprint. If we're searching for an elephant, we're going to look for a big footprint. So a bull elephant bar is a bar that is rather elongated in size. It is taller and has more green in it than most of the bars you see to the left of it. So as an example, the bars to the left of this bar are significantly smaller than the green elephant bar. Now, if it's not obvious to you that there's more green in this bar, and this bar from high to low is taller than the vast majority of the bars to the left, then if it's not clear to you instantly, then it's not really an elephant. Elephants stand out immediately. Elephants don't require that you think or analyze. It's in your face. It's unmistakable. This green bar is taller than almost all the green bars to the left, and it has more green in the bar than almost all the bars to the left. Now, some traders will ask me, Oliver, how many bars to the left must I consider to determine whether or not this is a true elephant bar or not? And I would always say we're looking for 5 to 10 bars to the left. Now, it's 5 to 10 bars of the same color, not the opposite color. Notice I did not put a red bar here, but I will put one now. And we're not talking about the red bars. We're going to consider just the green bars. Out of all the green bars to the left, all right, this green bar is considerably taller and has a lot more green in it. Now, this green elephant bar can be any time throughout the trading day. It can be in the morning. It can be in the afternoon. It doesn't matter. This bar can actually be the first bar of the entire day. And the bars that you're considering to the left of it are actually the bars from the day before. It doesn't matter. So if this bar is bar number 1 of the morning, then you're going to consider that in comparison to the last few green bars from the day before. If this green bar is happening 30 minutes after the market has already opened, then you're going to consider the bars to the left of this bar that's happened over the last 30 minutes or so. All right. And so the point I want to make is that part of this game is measuring the color. This elephant bar is unmistakably taller than all of the green bars to the left of it, not the red bars. We're considering the green bars. How many green bars? Anywhere between 5 and 10. All right. Anywhere between the previous 5 to 10 bars to the left. This is how we're going to judge whether or not we have a bar that is abnormal in size in comparison to the past 5 to 10 green bars to the left of it. Now, if we look at what I've drawn here, I've drawn a series of green bars and I've drawn a series of red bars as well. It's not the red bars I'm interested in. It's more of the green bars, all right? So the last 5 green bars, this bar in comparison to the last 5 green bars is clearly an elephant. Now, if you have to think, if you have to squint one eye and tilt your head to the left and say, I don't know, is that an elephant bar? It's not an elephant bar. Elephant bars are mistakable. Now, what I was saying is that this elephant bar this occurrence can happen anytime throughout the day. This bar could be a bar 30 minutes after the open. This elephant bar could be the first bar of the morning. If it is the first bar of the morning, then what you're comparing it to are the last few green bars from the night or the day before. All right. If it is a bar in the later in the morning, you're going to compare the size of this bar to the last few green bars that have happened just to the left of it. All right. And so what I want you to understand here is that a big part of being a good market reader is being cognizant of the amount of green and red that's being formed in your market. So if a certain level of green, normal green, is forming from green bar to green bar, and the formation of each green bar is rather the same size, normal to small, and then all of a sudden one bar starts to grow and grow and grow its green past this normal range, that it starts to stick out. It starts to present itself as an outlier, as something different, that's something that stands taller and bigger amongst its peers to the left. Then this is something significant. And I want you to become great at being able to recognize these occasional outliers, these occasional bars that grow out of the market, right, all of a sudden, and stand taller and bigger and stronger and more firm than all of their brothers and sisters to the left of them, okay? Same thing on the red side here. The red elephant bar, I want you to become very, very quaint at understanding, very good at understanding when you see a red bar all of a sudden grow out of the norm. It's almost like it's just this single bar breaks through and comes out of the crowd in a different way. And this elephant surge, if you will, out of the crowd is going to be one of your greatest trading opportunities. Now, very quickly, what I've drawn here in both of these scenarios, and let me give you a few green bars here. All right. And guys, what I've learned is that traders learn the best with a series of static slides and also a series of me drawing directly in your faces. And that combination sort of makes the information seep in a little deeper. So this is why I prefer to do some drawing on the slides, as well as having set slides, but also having slides that are not so complete that I can draw the formation in front of you. I found that traders learn the best this way, and it's similar to the market painting its bars in a live, real-time way in front of you as well. So in both of these scenarios, traders, what I have demonstrated here for you is a green elephant bar that is starting to surge out of the crowd to form an elephant bar. And you've seen on the right a red elephant bar that seems to leave the pack behind and grow out of the crowd into a fat elephant bar. What this is called, and we'll talk about this more in detail, what this is called is a clearing elephant bar. Remember that name. We're going to talk about this a lot. A clearing elephant bar. Why is it a clearing elephant bar? Because it is clearing the bars to the left of it. The green elephant bar is clearing the highs of the bar, of all of the most recent green bars to the left. On the right-hand side, the elephant bar is clearing through and beyond the most recent bars to the left of it. So clearing the highs, in this case, clearing the lows. All right. And this is one of our greatest opportunities in the market, the clearing elephant bar. And this is why I wanted to start off with you understanding how is green produced in the market and how is red produced. It starts off with the opening price of a bar, and all of a sudden you leave, a green bar is leaving its opening price behind, getting further and further and further away from the opening price. And so the distance away from the opening price is the color red to the upside, and the distance below the opening price is the color red. The distance from the opening price to the upside is the color green, and the distance from the opening price to the downside is the color red. And when that distance gets bigger than most of the bars to the left, it becomes a clearing elephant bar, and clearing elephant bars represent the most opportune moment, most opportunistic moment in the entire market. This is number one. So I'm starting you off with number one, and we're going to come back to this and we're going to go into great detail of this very, very special event. But I wanted to start off right away with the most opportune moment in the market. It's the growth of an elephant bar that leaves the crowd behind to become a clearing elephant bar. Remember that term, clearing elephant bar. All right. I want you to scan over these bars, and I want you to tell me if there are any elephant bars here. Now, remember what I told you. I told you that if it doesn't stand out like that instantly, if you've got to think, if you've got to wonder or analyze a little bit, there's no elephant bars. Elephant bars are unmistakable. Elephant bars require no thought, no analysis, no wondering, no thinking. If it's not obvious, it's not an elephant bar. And there's nothing obvious on this chart on this slide that you see here that would represent an elephant bar. I see little bars. I see normal size color bars, but I don't see anything that stands out amongst the crowd as being extra. Not on this slide. Now, if we go to this slide, it's a different matter. And this is all I'm trying to communicate. Elephant bars are unmistakable. They're not all clearing elephant bars. All right. But they are unmistakable. The size is unmistakable. The amount of color in the bar is unmistakable. Now, this is something that I think you should take a note of. Elephant bars are going to represent 65% of your plays in every market. I'm going to repeat that. The elephant bar represents 65% of all of your trades, which actually means that you can simply take the elephant bar occurrence and make a living in the markets with nothing else. You can literally take this occurrence in the market, this event called the elephant bar event. This event represents 65%, and that is enough to make your entire living in the market, simply waiting for a bar to leave the crowd behind in the form of an elephant bar. Now, it doesn't mean that I'm going to suggest that you do, but I do want you to know you will play nothing more frequently than elephant bars. It's going to be your number one play in the market. All right. Everything else we learn will basically be represent 35% of all of your activity. So 65% of all trades are elephant bar related. Okay. Very important to know. Take a note of that. Now, there are different types of elephant bars. Okay. What I'm showing you here is that some elephant bars are considered to be igniting elephant bars, and others are considered to be exhausting elephant bars. So some are igniting and some are exhausting. Let me explain to you what that is. An igniting elephant bar changes what was happening to the left of it. Let me give you an example of an igniting elephant bar that is beyond what you have on the slide here. Let's say, for instance, your stock was dropping in the form of a series of red bars like this. And all of a sudden, boom, you get this strong green elephant bar that changes the direction of what was happening to the left of it. The direction was down before this green bar, and it is igniting a new direction. It is igniting a new change. It is not continuing what was happening to the left. It's changing what was happening to the left. Very important. When an elephant bar changes what is happening to the left, it's an igniting elephant bar that suggests that there's a lot more that should follow. Igniting means it's just getting started. Igniting means it's the first step in an enduring race. An igniting bar means it's the first phase of a multi-phase move. It's the first step in a journey. It's the first step out of the blocks in a race. Igniting elephants are very special because they give us the first sign of what should be an enduring move, almost like a warning. Okay? Now take a look at the igniting. Take a look at the igniting bear elephant here. Why is this igniting? It's igniting because look at what was happening to the left. It was moving up and boom, the red elephant bar changes the direction that was in place before the bar. Now, if we talk about exhaustion bars, it's just the opposite. An exhaustion bar extends what was happening to the left, continues what was happening to the left. And exhaustion bars will tend to mark the end of a move, not the beginning, just the opposite, the end of a move or close to the end of a move. It stretches what was happening to the left. It continues what was happening to the left. And one metaphor that I've traditionally used to communicate exhaustion bars is imagine a multi-leg race with 4 runners, let's say. And the first runner passes the baton to the second runner passes the baton to the third, and the third runner passes the baton to the final runner who runs and dives into the finish line. That dive into the finish line is the final exhaustion bar, the biggest bar in the whole run that extends or stretches what was happening to the left. And if you look here, this is your exhaustion bar. It's extending, stretching, boom, what was happening to the left. And so think of exhaustion bars more as continuation bars that extend a race that has been going on for a while. And that exhaustion bar is either statistically the end of the move because that's the last runner diving into the finish line. It's either the end of the move or it's very close to the end of a move. And so it's important to understand these 2 different categories of elephants, because if you don't, you might get confused and believe that all green elephants are buy bars, but that's not true. Only igniting green elephant bars are buy bars. Now, I'll repeat that. Only igniting elephant bars, green elephant bars are buy bars, and only igniting red elephant bars are short bars, where you bet to the downside. You bet that the stock is going to drop. So if igniting elephants are our entry bars, then exhaustion elephants must be our exit bars. We sell exhaustion green elephant bars. We end the trade on exhaustion red elephant bars. All right. So if my entry was this bar on the igniting elephant bar, and we'll talk about entries as we get deeper and deeper into the day. All right. If I entered this igniting elephant bar, I am going to cover or end the trade on the exhaustion red elephant bar. In this case, if I entered the igniting green clearing elephant bar, I am going to exit if it produces an exhaustion elephant bar. It doesn't have to produce it, but if it does, I know that's very close to the end. So exhaustion elephant bars are end the trade or take profit bars, and igniting elephants are entry bars. All right. Now, once it becomes clear to me that I've got an igniting elephant bar, especially if it's like an igniting clearing elephant bar, all right, I will enter inside the bar before the bar finishes trading. That's called an anticipatory entry. I will dive into the bar. So let me give you an example. Let's say this bar, what you're looking at is a 2-minute time frame. Each bar represents 2 minutes of trading. Okay. I will enter that bar when it has maybe 1 minute and 40 seconds into the bar, and there's 20 seconds left of trading in that green bar. Boom, I'll enter before the bar finishes, as long as it is after 1 minute. So typically I will enter in the bar in the past the halfway mark. So in a 2-minute bar, I have to enter in the second minute. Okay. If it's a 1 minute bar, I'm entering in the second 30-second period. Okay. Always in the second half of the bar. But once I know, wow, here's an igniting, clearing elephant bar, and we're past the 1 minute mark in a 2-minute bar, boom, I can enter without that bar finishing. All right. I tend to like to enter toward the latter part of the bar's formation. So not only just past the first minute, I usually go past the first minute and 30 seconds, and somewhere around 1minute 35 seconds, 1minute 40 seconds, 1minute 45 seconds, boom, I'm inside of the bar. All right. Inside of the bar, let's say with 2 lots or 200 shares. Inside of this short bar, let's say with 2. And just to jump ahead a little bit, our basic, most utilized protective stop, where I protect myself, is 1 penny under the bar. That's the reason for my trade. This igniting bar is the reason for my trade. So my stop goes under the reason. This igniting bar is the reason for my short, betting on the downside. So my stop is 1 penny above the reason. And so my risk is this. My risk here is this. All right. So anticipatory entry into elephant bars that are igniting and especially clearing. We have to make sure if we do the anticipatory entry, it is past the halfway mark and preferably past the half, let's say past the 2/3 mark. All right, that's usually my entry. I like a little more certainty that the bar has no chance of changing its nature. All right, now if I make a mistake and enter an elephant bar too early, let's say it's 2 minutes, this is a 2-minute bar, and I enter 5 seconds into the bar. So this bar becomes an elephant bar really fast, 5 seconds. There's 1:55 left. That's an eternity. And the stock has too much time to change its elephant nature. It has 1:55 to fall back. But if I do this anticipatory entry 1 minute and 40 seconds into the 2-minute bar, it only has 20 seconds left. And it's going to be very difficult for this stock to change the nature of its elephant quality inside of 20 seconds. And so the idea is that I want to enter when I know the bar is going to close really soon, and it's going to close as the bar that I'm buying right now. All right. Same thing on the short side. And again, don't forget, protection is always, or in most cases, it is under our reason on a buy and above our reason on a short. And what this particular stop method ensures is that we only lose 1 bar, more or less. And if you can keep your losses to 1 bar, you're going to be in this game forever. The market will not take a trader out if they limit their losses to 1 bar. Now we'll cover stops in greater detail as we get deeper and deeper in the course, but I think these preliminary definitions are necessary for us to continue to understand some of the examples that I have coming up next. All right. Now let's talk about reading how control or power is lost. Now, we've covered an elephant bar. A green elephant bar is the bulls gaining power. They're winning the battle because they're able to produce the biggest bars, the biggest bar. Okay. If it's a red elephant bar, we know that the sellers are now dominant because they have produced the biggest footprint, the biggest bar. Okay. But that control can actually be lost. Now, what you're looking at right now are 2 examples of what I would call absolute control, which means that on the left-hand side, the bulls totally control the market. There is absolutely no strength being shown by the bears. And the reverse scenario is on the right, where the bears or the sellers are in so much control that there is no control, not even a little bit, displayed by the opposite side. Now look at this. There is something I call the 2/3 rule. If you have a scenario where the bulls have produced an elephant, which means that they're controlling the market right now, if 2/3 of that green is erased, they have given up their control. Right, I'm going to repeat that. If the bulls have produced a very powerful elephant bar, they are in control of the market. Boom. But if 2/3 of that green is eliminated, boom, right there, they have lost control. They don't have to lose all of their color to lose control. This is the main point here. It's the 2/3 rule. If 2/3 of the green is wiped out, the bulls, the buyers, do not have control of the market anymore. And the same on the sales, on the reverse side. This red bar is very powerful. It suggests that the sellers are totally in control of the market. But if for whatever reason this red were to disappear, part of it disappear, part of it disappear, and if 2/3 of the red disappears, they have given up their control. The key point, all of the color does not have to disappear for the bulls or the bears to lose control. Only 2/3 of the color. All right, let's take a look at some of these examples. All right. Here is what I would call full control. So here is absolute control, right? Absolute, no tails, no wicks on either side of the bar. Here is full control, where on the left-hand side, you had a green bar, a green elephant bar that at one point was absolute control by being at the highs. But before this bar finished trading, it started to back off a little bit, little by little, back off, back off, back off, back off. Now 2/3 is here. The bulls haven't lost control, but they've eased their control a little bit. So they still are in control. It's what I would call full control, not absolute control. Same thing on the red side. This bar at one point was trading all the way down here. And let's say this is a 2-minute bar. Let's say 1 minute and 50 seconds or so in the bar. Over the last 10 seconds, the bar moved up off of the lows and gave back just a little bit of its redness. Not enough to lose control, but enough to ease its control a bit. All right. And the next would be okay control. All right. It's not the best control. It's okay. On the left-hand side, the bulls still have control, but they've given up a decent amount of it. It's still good control. It's still more green than the majority of the bar still is represented by green. Okay. And on the right-hand side, the majority of the bar from high to low still is mostly color. But as you can see, some control has been sacrificed. All right. Not enough to lose control, but it's been sacrificed. And this is weak control. This is where it's getting really close to a complete reversal of control. All right. This is very weak control. On the left, your bulls are barely holding on here. And on the right, your bears, your sellers are barely holding on. All right. And of course, when you hit that 2/3 mark, the control is lost. And this is the main thing. You don't have to lose. An elephant does not have to lose all of its color to be lost, basically. The bulls lose at the 2/3 mark, and the bears lose at the 2/3 mark, not necessarily at the 100% mark. Now, remember when I told you that when you enter into an elephant bar, in the latter part of that bar's formation, as a general stop, your stop can be under, let's say, that elephant bar. So let's say this. Let's say this is your elephant bar. You have bought into this bar 1 minute and 45 seconds into the bar. It's a 2-minute bar. There's 15 seconds left, and for whatever reason, boom, it has lost, it loses 2/3 of its greenness, okay? Now remember I told you, as a matter of course, your stop can be 1 penny under the bar. Some traders, as an alternative stop that's tighter, they will use the 2/3 mark as their stop. Now, as you'll begin to see, I have almost everything in regular form and I have anticipatory form. So you're going to learn everything this way, where there's a regular version and then there's an anticipatory version. This is the anticipatory stop, the 2/3 mark, okay? The regular stop is under the entire bar. Now, anticipatory, regular stop. Anticipatory stop, you'd get out here. Regular stop, you'd get out there. Now, the $64,000 question is, Oliver, which one should I use? Which one is better? They're both extraordinarily valid. And here is where I would use the 2/3 versus the regular under the entire bar and vice versa. If the elephant bar is actually what I would call an elephant plus, it's actually beyond an elephant. It's extra tall. It's extra big. It has extra amount of green. It's an elephant plus. And let me cover what that is. If it's an elephant plus, I'm going to use the 2/3 stop and not the low. So let's assume that this is a regular elephant bar. That's a regular elephant bar. But let's assume this one is elephant plus. Now, take a look at this. This is your plus part right there. That's elephant plus. Now, this is somewhat subjective, but you're going to have to get used to doing this. If your bar is tall enough to be an elephant plus, but you're not quite sure if it's just is this a regular elephant or is this elephant plus? Okay, they're different. The general guideline is imagine 1/5 or 20% of the bar gone. Remove 20% of the green bar mentally in your mind. And if what's left still qualifies as an elephant, you have an elephant plus. That 20% part on top is plus. What's on the bottom is elephant. What's on the top, that top 20% is plus. Now, if you were to remove, let's say you were to have an elephant bar like this. Let's say you think this is an elephant. This might be an elephant plus, and you say, well, let me do the 20% test. I'm going to take 20% away. And I'm like, what's left? That's not an elephant. That's just a regular green bar. So in one case, imagining 20% off of the top turns it from an elephant to a regular bar, that means you don't have an elephant plus. But if by removing the top 20% mentally in your mind, if what's left still qualifies as an elephant, you have what's called an elephant plus. And if you have an elephant plus, you can opt to use a higher stop, not this one, but that one. Okay? And so think about what we have discussed here so far. We've discussed the fact that elephant bars are special in the sense that they will represent 65% of your plays. And we've also discussed that these elephants come in different forms. All right. So the first thing we said, there's the regular elephant bar. Now we're saying there's the elephant bar plus. That's different. That's longer, taller, more powerful. All right. And we do the 20% test to determine whether or not that is truly an elephant bar plus. Okay. Number 3, either your elephant bar or your elephant bar plus can be igniting. We've also discussed that your elephant bar or your elephant bar plus can be exhausting in nature. We've also discussed that your elephant bar or your elephant bar plus can be clearing. Remember that? Now, these two things, elephant bar plus, they are two main types of elephant bars. One's regular, one's the plus version. Okay? Either one of them, whether it's an elephant bar or elephant bar plus, can be igniting. Either one can be exhausting in nature, and either one can be clearing. Now, an igniting is not always clearing, but a clearing is always igniting. All right, we'll get into this in more detail, but this is what we've covered so far. All right, we've also covered that the best way to enter into an igniting elephant bar is to enter into the bar right before it closes. So if it's a 2-minute bar, 1 minute and 40 seconds, 1 minute and 45 seconds. The general rule is anytime after 1 minute, but I actually like a little bit more time. I want to make sure that that elephant has no time to change itself. All right. We've also talked about the best way in general to protect yourself is to use the elephant bar, the reason for your trade, as the basis for your stop. That is called an event stop. So if if a green elephant bar is bought, we put a stop under the green elephant bar. If it's a red elephant bar we have sold to short, we put a stop 1 penny above the high of that red elephant bar. The last thing we discussed is that if you have an elephant bar plus, it is taller than a regular elephant bar, then you have the option of using the 2/3 stop instead of basically the low or the high, but only if you have an elephant bar plus. And remember, because that bar is so tall, losing the whole bar might just be a little too big of a loss. So we raise that stop to the 2/3 point, or we raise that stop. I mean, we raise that stop or lower that stop in this case from here to the 2/3 mark in the form of a short, but only if it's an elephant bar plus. All right. And so if you think about what we're doing, I'm growing you in your awareness, in your activity from a single bar. All right. I'm growing what you do from one single bar in the market. And we're going to grow that into certain things that are multiple bars, 2-bar events, 1-bar occurrence, then 2-bar occurrences, then 3-bar occurrences, and so forth and so on. We're going to grow from 1 bar, this 1 bar, the elephant bar. So don't forget the types. There's your regular elephant bar and your elephant bar plus. And then you have elephant bar or elephant bar plus igniting, you have exhausting, and you have clearing. All right, those are your major types of elephants. Okay. Now, traders, as you know, some of you may know many of the things that I'm discussing right now, but a review of the basics, of the fundamentals is very useful throughout your entire trading life, actually. I found it very useful to do this with you periodically because it's my way of actually revisiting the foundational concepts that build proper market play. But please also understand that people come into our family virtually every single day, and some of them have no concept of how markets operate, how bars are formed. So I do have to be thorough with some of these basic but powerful concepts. All right. So if you already know these things, it's a very welcomed review, but also I'm going to explain it in a way, assuming that many still don't understand quite yet how markets work, operate, and move. Okay. Okay. Now, this is what we we're just talking about, the 2/3 retracement. On the left-hand side, you see the full control bar, and you see, what I'm going to do here is I want you to assume that this is an elephant bar plus, because if we remove the top 20%, that is still a nice sizable elephant. So it's elephant bar plus. I can use the 2/3 mark as my stop. And if this is the result, I'm out of the bar there, not there. Okay. If on this side, all right, I'm assuming that this is an elephant bar plus. Let me get this here. By removing the bottom 20%, I still have a nice sizable fat elephant bar. Instead of my stop being here, I can have a slightly tighter stop at the 2/3 mark. Now, the last thing I will say about this is that 2/3 stop is optional. Some traders just religiously use the high and low of the bar. They're willing to take the slightly larger stop or the slightly larger loss. All right. This is a personal choice, but it is one that I want you to have, know, and understand. All right. Okay. This is total control loss. All right. Still not the low has been gone here or the high here, but virtually all of the colors gone. And this is totally over for green. Now, remember, this was a solid green bar at one point during the bar's formation, and it lost all of its color. All right. Okay. Same thing on the red side here. From the opening price, your red has dropped from the open, and at some point before that bar finished trading, it lost all of its red. And this is what I would call loss. This is forever. The control is gone forever. This is so powerful. It's almost like, don't even think about the possibility of that color that was lost coming back. Now, remember, in this case, traders, before this red was there, before that red was there, if I can take this off, this red did not exist. And this bar was entirely green. So it shot up as a green bar. It lost a portion of its green. It kept losing its green. It lost all of its green here. And then it went under where the bar started. Its initial trade was there. It went even past its first trade of the bar to produce the opposite color. So green was here, and now it's producing red on the other side of the opening price. Remember, the opening price of the bar is neutral. Above that price, that's the first price. Above that price paints green. Below that price paints red. And so here is that price. All right. Above that price is green. Below that price is red. And so when a strong, powerful green bar loses not only all of its green, but then starts to produce the opposite color on the opposite end of where the green was, this is control so annihilated that there is no chance that green comes back from this defeat. Same thing here, very little chance that red comes back from this type of defeat. All right. Another way of saying this, the odds of more red following this is very high. The odds of more green following this is very high. Okay. And so it's important to know and understand from a fundamental point of view how one side, the bulls or bears, can grow suddenly into the dominant force in one bar. It can explode out of the crowd, leave the crowd behind, and stand taller and stronger than the vast majority of its brothers and sisters to the left. All right. Same on the green side as it is on the red side. It's also important to understand how sometimes that control can be taken away in the same bar. It can happen so fast, and it can at times be taken away. And you need to know in which scenarios are you, if you have gotten into that bar, which scenarios are you going to get out under the low or the high? And which scenarios are you going to get out or jump ship early at the 2/3 mark? And I say, as a general guideline, if that bar is extra tall, use the 2/3 stop. If it's just a normal elephant, you use the entire bar stop. All right. So you've got those two choices, the 2/3 and the whole bar stop. All right, good. Now, let's go over this again. And the reason why I want to cover it again is because there are two ways that your power can be lost. All right. We've covered the first way is that the loss of control happens in the same bar. The very same bar is the bar forms the control, and then also in the same bar, it loses the control. In scenario 2, it's the next bar that wipes out the control. Here is full control. Here is good control. Here is weak control. Here is lost control. The 2/3 mark. Here is bears in control forever. On the left, bulls in control forever on the right. Now, we're going to come to know these two events as the bull and bear 180. All right. This is the bull. I'll do it as a plus 180. This is the bear. I'll do that as a minus 180 play. It's one of the most reliable plays in our arsenal. You've heard that before. The first one, a clearing elephant bar, is one of the most reliable occurrences in our arsenal. Now I'm telling you the second one, another one. The bull and bear 180 is another one of those most reliable occurrences or events we have in our trading arsenal. You put the clearing elephant with the bull and bear 180 event, and you have two of the most powerful things the market can give you. Two things that have the highest degree of follow-through rate. That's what we're really looking for. What has an extraordinarily high chance of continuing the color for the desired color for a while? Isn't that what trading is all about? Finding a moment to jump on board something, to jump on board one color and almost know with the highest degree of certainty that there's more color to come. If you jump into green, you want to know with a high degree of certainty that there's more green left, because that's where your profits come from. If you jump into red, you want to know with a high degree of certainty that there's, even I'm getting in now, there's more red to come. That's where your profits are. And these two things, the clearing elephant and the 180, the two most reliable things that we have in our arsenal that tells us more of this, more of the color is coming. Because red has, on the left hand side, because red has completely eradicated, eliminated, obliterated green, we give the benefit of the power to the most recent power. Yes, green was powerful, but red immediately dwarfed the green power. We give the benefit of the doubt to the recent power, not the power before the recent power. Okay, so red in this scenario is the recent, more dominant power because it completely erased and removed the green power. On the right-hand side, you just got the reverse. First, we had red power that gets totally erased by green power that's actually taller, stronger, and bigger by this amount right here. All right? Very powerful. Very powerful. Now, we'll cover this event more in detail, but depending upon where this is, we want to bet to the downside, because as I told you, in this scenario, the odds of more red is very high here, and the odds of more green here is very high. The odds of follow through on this event is extraordinarily high. Again, you can always dive into an elephant bar. This is a red elephant bar toward the end of the bar's formation before the bar finishes. Your protection can always be at the high of the bar But if it's a little too tall for you, you can use the 2/3 stop. In this case here, if you want it to dive into, all right, you want it to dive into the green bar, elephant bar, before the bar finishes. 1 minute and 45 seconds, 1 minute, 40 seconds, something like that. You can put your stop right under that bar. Or if that's a little too far for comfort because the bar is an elephant bar plus, you can opt for the 2/3 stop. Okay. All right. Good. Covering some basic things step by step. Now, remember, traders, it is highly desirable that you come back and you review these sections multiple times just to get it thoroughly understood under your belt. All right. It is not enough to do this once. It is not enough. All right. So I'm doing this in a thorough way, but you have to make it the most thorough by repeating these sections. You don't have to repeat the whole 2 days in 2 days. You can take it section by section, but these should be reviewed over and over and over again until you know you've got it. It's nothing you have to think about anymore. Okay. All right, guys. Fantastic. I love it. Building. Now, remember I told you we were going to start from 1 bar, all right, and go into 2-bar things and 3-bar things and 5-bar things. So we actually quickly slipped into 1 bar into a 2-bar event, right? This is a 2-bar event. The elephant bar is a 1-bar event. This is now a 2-bar event, and we've assigned a name to it. The name of this event is, one more time, just want to make sure you get this. This is a bull elephant. This is a bull 180. Why do I call it 180? Because it's like a 180-degree turn back to the upside. It was first powerful red, and then boom, a 180-degree reversal. 180 degrees in the opposite direction. All right. And this is your bear 180. All right. It was powerful green and boom, 180 degrees in the opposite direction to the downside. All right. Very powerful. Remember, elephant bar clearing and 180s represent the 2 most powerful things you will ever play in any market, in any time frame. These 2 things, they're your power. Okay. Why? Because the odds of follow through are extraordinarily high. Okay. And remember, the elephant bar scenarios, this is an elephant bar scenario too. All right. The elephant bar scenarios will represent as much as 65% of your trades. All right. And that's why I start with the most prevalent one.